morning, traders. I would like to take a look on multiple instruments this morning. I received a question about palladium, and why in the world is palladium crushed? One reason only, because Fibonacci said so. This is Fibonacci reversal zone. This is where every single instrument, no matter if it's Apple, no matter if it's palladium, no matter if it's anything, will crush or will stage powerful bullish rally. Almost 80% of the time. Roughly 80% of the time. This is palladium. This is the problem. This is exact same reason oil crushed. Shock or not, because it came to reversal zone. One reason only. This is what oil looked like before, a year ago. Showing you reversal zone ahead, showing you what starts happening if you buy close to reversal zone. Bad idea. Oil in sell-off. Lifeline on oil 64. What do I say? 64 is out, oil in free fall. And this is oil now. Stage bullish rally from key Fibonacci support. What is a big problem on oil? Exact same level that was key Fibonacci support. Now major Fibonacci resistance. All in advance, all independent of earnings, all independent of any indicators. Market is flawless Fibonacci puzzle. Nothing else is needed, ever. And here is exact same Fibonacci reversal zone on Apple. This is Apple today on March 28th. Apple sold off from Fibonacci reversal zone. Apple rallied from Fibonacci reversal zone until this key Fibonacci resistance. And this is Apple a year ago. In pain at key Fibonacci resistance, doubled in value despite coming out with the worst earnings in 13 years when Apple was at 91. Fibonacci support respected, Apple rallied. What do you see ahead? Fibonacci reversal zone. Does Apple reach this level? Yes, after taking a pause at decision point 2. And here comes reversal zone. Well before pause on latest iPhone. And this is reminder. Nothing else matters. Market is flawless Fibonacci puzzle. And what do you see ahead? 140 trend inception. Not the place to short near, the place to expect bullish rally from. And this is Apple now. All in advance, never after the fact. Placing random trades will never work. Monitoring for trend inception and trend reversal and knowing where to place the trade is the key. What is another instrument that's so extremely interesting nowadays? Gold. If there's a reason gold selling off, of course. This is where gold sold off from 2018. This is where gold rallied from 2018. This is where gold selling off from 2019. Not the place to buy, the place to exit. And this is gold before sell-off in 2018. And this is gold 2016 and 17. Not the place to buy, the place to exit. And that's constant. What you want to trade is your choice. Identical accuracy applies to all the instruments. Identical reminder why palladium is selling off. Nothing in the market is random. And is it possible that Amazon sold off for exact same reason. $700 per share, despite stunning earnings. Of course, because Fibonacci said so. This is Amazon now, in pain, where Amazon sold off from last fall 2018. Not the place to buy. Overextended bullish rally taking a massive, massive pause. This is Amazon before. At the start of 2018, showing you 2000 reversal zone. Not the place to buy, the place to exit. Market is flawless Fibonacci puzzle. These are proprietary Fibonacci levels I developed in 2008 and been teaching to traders from beginner to hedge fund managers since 2011. These levels give you ultimate accuracy. These levels will override any news, any earnings, any fundamentals. Knowing how to use these levels, knowing where to place the entry is the key. And that's where I step in to guide you. Nothing else matters. And if you want to be day trader, you never touch junk, you never participate in fluff. Identical structure as on Apple, where Apple had been for almost 2 years, between key Fibonacci support and key Fibonacci resistance. All the same, to the tick. Not the place to buy, not the place to short into. And if I convert this chart to 5, identical formula remains. Look at this problem before market open, just like Apple. And if I take a look on Tesla now versus Tesla before, what would it show you? Look at that. Key Fibonacci support respected. Tesla rallying again. 255 lifeline on Tesla. This was Tesla year and a half ago. My goodness, sitting at key Fibonacci support and selling off from key Fibonacci reversal zone. Nothing else matters. Here's Tesla 12 weeks later rallying again. What is the problem? Fibonacci reversal zone cannot buy into. But SEC investigation doesn't matter. What matters? Fibonacci support. Tesla lowering prices to 35,000, shaving off 50%. Doesn't matter. Tesla keeps selling off. Time and time again. Market is flawless Fibonacci puzzle. You don't need anything else. What you need is knowledge or my guidance. Choice is yours. Tesla rallying again. All in advance, never after the fact. And this is S&P this morning. Shock or not. Not the place to short into, just like Tesla. We knew that extremely well. We knew that market been in pain for the last 30 minutes. Ultimate reminder, price action remains the same. What is the difference? Risk management and time hold on trade. Do you want to trade 5 minutes? Do you want to trade 5 hours, 5 days, 5 weeks, 5 months, 5 years? Choice is yours. You want to trade them all? Why not? This is S&P long-term chart, traders. This will be war zone next. This is S&P weekly chart, traders, right now. Take a look at this chart and I will remind you what S&P looked like a year ago. This will be war zone on S&P, traders, 2900 level. This is where S&P sold off from 2018 twice. What was a lifeline on S&P 2018? This key support 2600 number. Let me remind you what S&P looked like in 2018, and this is the reason why this level is so crucial, which is exactly what you witnessed on S&P this morning and now. Pre-market, support, and now. Here's S&P traders 2018 at key Fibonacci support. Do you remember that? 2600 number? My goodness, how long did S&P dance at this level? For over a year. And this is what happens next. S&P continues respecting this level until it finally starts crushing through. Just took a year. No surprise where S&P rallied from. And this is S&P now. All in advance, nothing ever after the fact. Identical formula applies, no matter what you trade. This is the problem now. 2018 was key support. 2019 will be key resistance. Knowing what to do with your position requires knowledge. Market is flawless Fibonacci puzzle. This is not software. This is not indicators. This is pure price and proprietary Fibonacci retracement tool and proprietary Fibonacci strategies that have high accuracy. And that's S&P now. If I convert the chart to 1, what do you see? Shock or not, just like weekly, to the tick. Key support, key resistance. Identical price action now.